Bitcoin was in the middle of a record run that would take it to a high of almost $20,000 a coin. But Bitcoin was a turkey this Thanksgiving, falling to a 2018 low of $34.47 on Sunday. Today, it is still down 80% from that December 2017 high. Let's bring in Brian Kelly, the founder of Brian Kelly Capital and a fast money trader. Beakers, good to see you.
Hey, Melissa, good to be here.
You know, as much as we're hand-wringing over this huge decline, you sent over a chart which basically says we've seen this movie before. Can you walk us through this chart?
Yeah, sure. I mean, Bitcoin since 2010, from 2010 to 2012, and then 2012 to 2014, saw very, very similar moves. We saw a huge run up, just like we saw this time last year, and then a sell off again, and it repeated itself. And so we're through that now. It doesn't feel very good. As an investor, it certainly doesn't feel very good. But I think people need to remind themselves that this is the most risky thing you can do with your money. It is cutting edge technology, and it'll be extremely volatile.
Does this sort of decline, does this help or does this hurt the move of institutional investors into this space? Because that had always been cited as a catalyst, that institutional money will come into the space. When you see a decline like this one that we're living through right now, does that make institutional investors say, hey, you know, it's a bargain now? Or does it make them say, you know what, this just shows how volatile this asset class is and I want no part of it?
Yeah, it's interesting. That's a great question because I thought we would see, at least from my perspective in our fund, we'd see a lot of outflows. What we've seen from institutional investors is more interest than we have in the last couple months. When we were around 6,000, institutions said, hey, listen, this thing's gone through a bear market. It hasn't gone away. I need some exposure. Down at these levels, it certainly probably looks a little more attractive. But importantly, what institutions are doing are sizing it appropriately. 1 to 5% of their portfolio is coming into this asset class.
So when you talk to these investors who are interested in Bitcoin now, how are they viewing Bitcoin? Because there was a case where it was a store of value. Mm-hmm. I mean, an asset that goes from 20K to 3,400, it's hard to say that that's a store of value with that sort of volatility. Others will say it's a means of transaction. It's an actual currency. But if you are to believe that if there are more transactions and the more Bitcoin is used, the price should go higher too. It's hard to make that argument as well. So when they're investing in this, what is it in their view?
So there's two things that they're investing in. Number one is Wall Street 3.0, where we've gone from securitization to tokenization, and that's going to be a 5 to 10 year process. The second part of it is Web 3.0, where we're removing the kind of tracking mechanisms that Facebook has and creating a new web where the user controls the raw data. Those are the two big mega trends that institutions see that they're investing in here. Now, in terms of the store value, something that goes from 20,000 to 3,000, I don't think there's anybody's going to argue that that is a great store of value. That being said, what's interesting, even in this decline, we've seen transactions go up. Over the last few months, we've seen the number of transactions increase on the Bitcoin network, which to me says, hey, this thing's still being used as some kind of a medium of exchange.
What, if any, individual investor should buy Bitcoin and how should they do it?
That's a great question, Tyler, because in my view, I think everybody should have some piece of cryptocurrency, of Bitcoin in their portfolio. But again, it needs to be a really small portion of your portfolio. Let's say 1%. If you put 1% of your portfolio into this, then you can ride out the bear markets. And that's why I sent over that chart from 2010 to 2012, 2012 to 2014. We've had two booms and busts prior to this one, and you can ride it out. So if you're the one who said, hey, back in 2014, boy, I wish I bought this thing at $300, maybe you're getting another shot right here.